Believe it or not, some EVs are out there making car companies bleed money. We're talking billions of dollars in losses, production lines shutting down, and the whole EV dream on life support. Did you know some car companies are facing a potential automotive meltdown with over $5 billion lost already? Crazy, right? So what's going wrong? Why are these EVs failing to spark sales? In this video, we will expose the reasons behind the EV industry's downfall. We'll be diving into consumer concerns, production issues, and the future of electric cars. So, stick around and let's get started. Now that's right, automakers, including the biggest giants like Ford and GM, can't sell EVs. They're in a real bind. They're losing billions, laying off thousands of people, and there's even talk of them going under. Ford handed out pink slips to over 1,000 workers in just 1 week. It's a mess, folks. We could be witnessing the mother of all car crashes, and it's got everyone in the industry on edge. General Motors is also teetering on the brink. Guess who's holding the axe? Yes, their own CEO. It looks like both Ford and GM are struggling to move their electric rides off the lot. It's like they're stuck in mud, sinking deeper by the day. And it's not just a few cars gathering dust, we're talking about a full-blown inventory nightmare. As I told you earlier, they're staring down the barrel of over $5 billion in losses. Now, let's talk about what reports and numbers say. Ford is hemorrhaging cash with every EV they sell right now. They're losing a whopping $336,000 on each electric ride. Selling something and watching more money vanish than the price of a brand spanking new car is pretty mind-blowing, isn't it? But wait, it gets worse. Ford's electric vehicle division dropped a bombshell. They're in the red to $1.3 billion in just 1 quarter. And get this, it's even worse than the $1.1 billion loss they suffered in the previous quarter. Compared to last year, their losses have more than doubled. You could practically hear the alarms blaring over at Ford's headquarters. Now, you might be wondering, what on earth is happening here? According to Ford, it's all down to their heavy investment in EVs and some tricky market conditions. They're pumping loads of dough into crafting these fancy electric rides, but the sales aren't keeping up. Plus, many people in North America aren't too keen on shelling out top dollar for these fancy EVs when they can stick with good old gas or hybrid rides. Moreover, Ford's beloved F-150 Lightning, the electric truck that was supposed to be a game changer, well, it's DOA. They've slammed the brakes on production, and now Jim Farley, the big cheese at Ford, is urging everyone to think of Ford like a scrappy startup and brush off all the losses they're racking up. It's as if they're trying to spin gold out of thin air. Crazy, right? Now, let's get into General Motors, where the situation is even more dire. They've axed over 1,000 workers in just 1 week, and sadly, there have been fatalities linked to their vehicles. So, what went down exactly? Well, GM CEO Mary Barra is in the hot seat making decisions after decision. And let's just say that not all of them are hitting the mark. The company's facing a slew of issues, from decreasing EV sales to troubles with their self-driving car unit, Cruise. And what's Mary Barra's move in the midst of all this chaos? She's gone on record saying that GM won't be slashing prices and forget about cheaper EVs under $30,000. She thinks they won't turn a profit. Instead, she's doubling down on luxury EVs, completely brushing off the average Joe. But GM had this big plan to churn out 400,000 EVs by mid-2024. Sounds ambitious, right? Well, they're scrapping that plan really fast. Why? Because the demand for their electric rides just ain't there. It's like throwing a massive bash and nobody bothers to RSVP. In the first quarter of 2024, GM is taking hit after hit. It's a rough ride, and they struggle to keep their heads above water, with Mary Barra at the helm. GM's future hangs in the balance. Now, General Motors churned out around 32,000 EVs, a solid 40% increase from their second quarter. Sounds like good news, right? Well, not exactly. Despite the production boost, their sales only grew by 28%. The math just doesn't add up. And to add fuel to the fire, they've hit the brakes on the production of their electric trucks like the Chevy Silverado EV and the GMC Sierra EV, pushing them back from 2024 to late 2025. But GM isn't slowing down, they're making some tough calls. They're talking about slashing expenses, delaying factory plans, and even doing stock buybacks to keep shareholders smiling. Now, let's talk about the Cruise. This robo-taxi unit was supposed to be a home run for GM, but it's turned into a total nightmare. After a tragic incident where a driverless vehicle struck and killed a pedestrian, they've slammed the brakes on all operations. Top dogs at Cruise are jumping ship left and right, and layoffs are looming on the horizon. As if that's not enough, GM's financial woes are stacking up. United Auto Workers strike has cost them $800 million since it kicked off. And just wait till you hear about Ford's latest move. They're forcing dealers to cough up thousands and even millions of dollars just to get their hands on EVs. And let's not forget about the hardworking people caught up in all this mess. GM's making some deep cuts, laying off around 1,300 workers as they scale back production of the Chevy Bolt and Camaro. The Orion assembly plant where these layoffs are hitting is getting a makeover for electric trucks, but that won't be up and running until 2028. Imagine being one of those workers showing up every day, giving it your all, and then suddenly being told you're out of a job. Now, let's circle back to Ford's CEO, Jim Farley. Here's something that'll make you do a double take. Nearly 50% of EV buyers are ditching their electric rides for hybrids. People are actually trading in their EVs for good old gas and hybrid cars. In 2023, hybrids like the Toyota Prius were stealing the spotlight, making up 0.3% of car sales in the US. That's way ahead of the 6.9% for EVs. And why the sudden love for hybrids? Well, they're more wallet-friendly and don't come with the hassle of charging woes. The average hybrid was priced around $42,181, a far cry from the hefty $59,400 you'd have to fork over for an EV. In the second quarter of 2022, Ford dealers were flying high, selling a whopping 86.4% of their Mach-E inventory within just 30 days. But fast forward to 2023, and that number takes a nosedive, decreasing to a mere 27.7%. Even with over twice the inventory, the Mach-E sales figures tanked by a staggering 90% year over year, dropping from 10,941 vehicles to a measly 633. Ford's head of US sales analysis, Eric Merkel, is trying to keep a stiff upper lip about it. Sure, he says EV sales are up overall, but let's face it, a bunch of those unsold Mach-E's are just gathering dust on dealers' lots. They're not exactly flying off the shelves like hotcakes. And the F-150 Lightning? Well, it's not exactly faring much better. Last year, Ford was moving 70% of its Lightning inventory within 30 days. But this year, only 35%. It's like everyone was hyped up about this electric truck and now they're giving it the cold shoulder. So, what's Ford's ambitious target amidst all this chaos? They're aiming to churn out 600,000 EVs this year. But they're expecting to take a hit of at least $3 billion in the process. And if that's not crazy enough, Ford's asking their dealers to pony up a cool $1 million just to become EV certified and sell these high-tech yet seemingly unprofitable vehicles. Imagine being a dealer, shelling out all that cash only to watch these EVs gather dust in your showroom. Also, some Ford dealers, especially on the East Coast, are crying foul, saying that Ford's production is way off the mark compared to what consumers want. People are clamoring for affordable EVs with a range of over 300 miles without all the useless technological bells and whistles. But it seems like the big brands just aren't getting the memo. Ford and GM dealers are drowning in stockpiles of Lightnings and Mach-E's that they simply can't move. They're so overwhelmed that they're actually turning down allocations from Ford, something unheard of, like a kid saying no to candy. It's not just a blip on the radar for Ford, it's a glaring sign of a much bigger issue in the EV market. Even Tesla's feeling the squeeze. They're decreasing prices and offering deals left and right to clear their inventory. And the states with the biggest EV sales are now seeing the slowest growth. And 70% of those orders of 200,000 Lightning reservations are also gathering dust and unfulfilled. By the time these Lightnings finally hit the lots, who knows if the customers will still be there? Ford's November sales paint a bleak picture too. Overall, they're down by 5% compared to last year. Sure, EV sales hit a record high, but it's a drop in the ocean compared to their gas-powered vehicles. Even their pickup trucks and SUVs, usually their strong suit, are taking hits. So, what's the bottom line here? Ford and GM, like many other automakers, are learning the hard way that transitioning to EVs is no cakewalk. The Biden administration is pushing for a new game plan with strict emission rules, aiming for 67% of all new cars to be electric by 2032. But should car makers be listening to politicians rather than their customers? Share your thoughts on this and don't forget to subscribe to the channel. Until next time.